You need to hear this if you're a car owner or work in the auto industry. Trump just exploded as Tesla and Ford leave America, and Canada is taking over the auto industry. The global economy is on edge as President Trump reignites a sweeping trade war. In March 2025, he announced a 25% tariff on imports from Canada, Mexico, and China, sending shockwaves through financial markets. After a brief delay, tariffs on Canada and Mexico are moving forward, creating chaos for industries reliant on cross-border trade. The automotive sector, with its integrated supply chains, is hit hardest. Tariffs on China, initially 10%, were doubled to 20% and enacted immediately, targeting tech and auto manufacturing. The White House is also eyeing a 25% tariff on EU cars, threatening decades of global economic integration. Companies are scrambling to adapt, with automakers facing soaring costs for steel, aluminum, and imported parts. The era of predictable, low-cost supply chains is ending, replaced by economic nationalism and uncertainty. Allies and rivals are promising retaliation, putting trade agreements under severe strain. The risk of a spiraling trade war looms, forcing the auto industry to navigate tariffs, political tensions, and operational upheaval. This new reality could reshape the sector for years to come. Facing steep U.S. tariffs, automakers like Tesla and Ford are eyeing a move to Canada. The 25% tariff on Canadian and Mexican goods makes cross-border supply chains financially unsustainable. Ford's century-old integrated production is now a logistical nightmare, while Tesla's reliance on Mexican and Chinese parts exposes it to heavy import taxes. Tariffs on steel, aluminum, and possibly copper will further inflate costs. Relocating to Canada could help these companies sidestep U.S. tariffs while serving the North American market. The Canadian Vehicle Manufacturers Association warns that continued tariffs and regulatory pressures could force automakers out of Canada entirely. The free flow of parts and vehicles is essential. A 25% tariff destroys that logic. For Tesla and Ford, Canada offers skilled labor, infrastructure, and access to EV materials. Assembling vehicles in Canada could insulate them from U.S. tariffs and keep them competitive. This potential shift is a direct response to U.S. trade policy, forcing American companies to seek refuge with a key ally. The North American auto industry faces a dramatic realignment. Trade policy is now driving where cars are built. Canada is fighting back, announcing 25% reciprocal tariffs on a wide range of U.S. goods, including electric vehicles. The move targets high-profile American exports and key political states. Ontario Premier Doug Ford canceled a major contract with Elon Musk's Starlink, signaling that all Musk ventures are fair game. Liberal leader Chrystia Freeland proposed a 100% tariff on Tesla vehicles, highlighting Canadian frustration. Foreign Affairs Minister Melanie Joly confirmed a $155 billion retaliatory tariff plan is ready. Mexico is also preparing countermeasures to protect its industries. The unified front from Canada and Mexico complicates the Trump administration's strategy. U.S. exports now risk being locked out of two major markets, threatening American farmers, manufacturers, and workers. Automakers face closed export markets and rising costs, forcing a painful reevaluation of investments. The trade war is escalating, with casualties expected on all sides. Canada's ambitious EV mandate, 20% of new vehicles electric by 2026, has become a flashpoint. Traditional automakers warn the mandate, combined with U.S. tariffs, could force them to leave Canada. The policy benefits Tesla, which sells regulatory credits to competitors who can't meet the quota. In early 2025, Tesla earned over $400 million from these credits in Canada alone. The Trump administration is pressuring Canada to scrap the EV mandate as a condition for lifting tariffs. Canada faces a tough choice: abandon its climate policy or risk losing its auto industry. Consumer demand lags, with EVs making up less than 9% of sales, far from the 20% target. Automakers may have to limit gasoline car sales, angering consumers. The EV mandate is now a bargaining chip in high-stakes trade talks. It's a lifeline for Tesla, a threat to rivals, and a test of Canada's resolve. Trump's tariffs have created chaos for Tesla abroad, but handed it a major edge at home. Tesla builds all U.S. vehicles domestically, avoiding the new 25% import tariffs. Rivals like Ford and GM rely on imported parts, now much more expensive. The administration is also cutting subsidies for EV infrastructure, hurting competitors still building out networks. Tesla's established supercharger network and U.S. battery production give it a protected head start. While rivals face rising costs, Tesla can maintain or lower prices, capturing more market share. The tariffs, meant to protect American industry, are punishing legacy automakers and rewarding Tesla's U.S.-centric model. America First is turning into Tesla First in the auto market. Trump's tariffs are reshaping the U.S. auto market, with higher prices hitting consumers first. Automakers will pass on the 25% tax on imported parts and vehicles, making cars more expensive. Popular models relying on Canadian, Mexican, or Chinese components will see price hikes or disappear from showrooms. Entry-level vehicles, already low margin, may vanish as automakers cut unprofitable lines. The market could become dominated by pricier, domestically produced cars. Investment and long-term planning are chilled by policy uncertainty. Automakers hesitate to invest billions in new U.S. plants amid shifting rules. The ripple effect threatens suppliers, logistics, and service providers. The U.S. risks losing global competitiveness by isolating itself behind tariff walls. The integrated North American auto bloc is unraveling, replaced by a fragmented, higher-cost market. The very industry tariffs aim to protect may become less resilient and innovative. Tesla's U.S. advantage is offset by severe international setbacks. Sales in Europe have plunged, down 18% in the UK, 75% in Spain, and 60% in Germany. Competition from European automakers and China's BYD is eroding Tesla's market share. Elon Musk's polarizing image is alienating core buyers, hurting brand favorability. Regulatory troubles, including violations of Europe's Digital Services Act, add to Tesla's woes. China, a key market and supply chain hub, may retaliate against Tesla in response to U.S. tariffs. Tesla's stock has dropped 25% since late 2024, reflecting investor anxiety. Ongoing investigations into Musk add further uncertainty. Domestic tariff protection can't shield Tesla from global headwinds. The company's long-term growth is at risk as international challenges mount. The trade war marks a fundamental shift in the global auto industry. Integrated supply chains are giving way to protectionist blocs and political barriers. U.S. tariffs on Canada and Mexico dismantle the North American partnership, forcing costly realignment. Companies must now localize production within trade blocs or face steep penalties. Tesla's U.S.-centric model is an advantage, while globalized automakers like Ford and GM are vulnerable. Canada faces both risk and opportunity, potentially becoming an EV manufacturing hub if it navigates the crisis well. The future is one of fragmented regional supply chains, more resilient, but less efficient and more expensive. The global car is fading. American, European, and Chinese cars will dominate their own spheres. The auto industry's new era is defined by division, risk, and relentless change.